Hello guys, welcome back to our YouTube channel. So guys, today we are going to take a look at our previous question paper, which is grade 12 accounting paper 1, November 2022. Marks out of 150 for 2 hours. But guys, in this question paper, we are only going to take a look at question 1, which is company financial statements, statements of comprehensive income, and statement of financial position for max 60 minutes 45. And then guys, let's start going. Let's go to our question 1 and start with our video. And then guys, it says company financial statement, statement of comprehensive income, and statement of financial position. Information. The information relates to lesson no Ltd for the financial year ended on 28 February. So guys, our financial period ends when 28 February 2022. So in this case, we need to have a timeline, and then this is the timeline that we are going to use. It ends when our financial year ends February 2022, meaning it started when? It started March 2021. We have March, April, May, June, July, August, September, October, November, December, January. Then it's our 12-month period. So in accounting, we say that anything that has not yet been received during our financial period, or anything that has not yet been paid, then they will be determined by the positive sign, and then those will be what? Accrued income as well as accrued expense. And then anything that has not has been paid at after the end of our financial period, or anything that has been received after the end of our financial period, then it will be determined by a negative sign. So guys, anything that has been received or anything that has been paid after the end of our financial period, then it will be shown by a negative sign. And then guys, all those things, they will be what? Income received in advance, as well as what? Prepaid expense. And then our financial year ends when? February. So anything that has been what? Received, it will be what? Income received in advance, and it must be subtracted from our income statement. And anything that has been what? Paid in advance, such as prepaid expense, it must be what? Subtracted in our income statement. And then guys, we can start with our information. And then it says required 1.1, refer to information B only, meaning in this case we are going to refer to information B1. And then they are saying calculate the cost of the stock that was damaged for 5 marks, meaning now we need to calculate the cost of what? Of stock that was damaged by referring to information B. And then guys, we have our answer sheet. Our answer sheet has been provided to us, and then we are going to use this answer sheet to show our workings and also our final answer. And then guys, let's quickly move to information B. This is our information B. Information B says additional information, and then stock records. The business sells t-shirts, so we know that this business sells t-shirts. And then the weighted average method is used to value the t-shirts. So guys, since we know that they are using weighted average method to calculate the value of stock, then we need to have our formula. So our formula for weighted average method, it will be your opening stock amount plus purchases amount plus carriages amount, subtract returns, and then divided by their units. Units for opening stock plus units for purchases, and also subtract units for returns. And then that is our formula. So in this case, guys, let's follow our formula and also record those so that we record our so that we determine our weighted average method. And then we said, in order for us to be able to calculate weighted average method, we need to have what? Purchases. So in this case, we have purchases as what? As our opening stock March 1st of March 2021 as how much? As 1,254,000. And then we add our purchases, which is how much? 5,325,000. And then in this case, we don't have any carriages, we don't have any returns, then we are just going to what? To divide by their units. Units for opening, it's given as how much? 1,900. Then we are going to write our 9,900, and then plus our what? Units for purchases, which is how much? 7,100. And then equals to how much? And then guys, we are going to punch that in our calculator, whereby we are going to say 1,254,000 plus 5,325,000 equals to how much? Equals to 6,597,000. Divided by how much? 1,900 plus 7,100, and then divided by 9,000. And then our final answer for our weighted average method, the weighted price that we are going to use, it goes as follows. We are going to say 6,579,000 divided by 9,000, and then equals to 731. So this is our what? It's our weighted price that we are going to use in order to determine the closing balance of stock and everything. And then guys, let's continue with our information. And then remember that we are calculating what? The cost of damaged stock. And then we continue. And then guys, in units sold, it's how much? 7,750, meaning total available goods that were available for sales, we had how much? 9,000. And then the units that are supposed the units that were sold is how much? 7,750, meaning at the end of our financial year, we are going to say as a business that we had the opening stock of 1,900 units, and then we purchased more for we purchased more units, which is 7,100 units, and then we had 9,000 as our what? As for units that are available for sale. And then on this financial year, we only sold 7,750 units. we only sold 7,750 units, meaning at the end of our financial period we need to what to say 9,000 subtract the units that were sold, meaning at the business currently we must have how much? 1,250 units that are left in the business after what? After selling. But in this case, in their books, they are saying that we are left with 1,185, meaning we lost there. Then we are going to just look at the difference that based on the given figure, the difference that we have lost is this much, and then we're going to say 1,250 subtract 1,185, and then we lost 65 units of stock. And then because of we are looking for an amount, then these units will be multiplied by our weighted average price, and then which is 731, and then our final answer will be 65 multiplied by 731 rand, and then we lost 47,515 rand. So these are the what are the units, this is the amount of stock that was damaged in the business and it's lost. And then they say no, the t-shirts were not included. T-shirts were not included in the closing stock figure. The damaged shirts must be written off as a what? As a loss, meaning this amount must be shown under our income statement as what? As a loss of stock. And then immediately we are going to go to our income statement, and then we are going to write what? Stock loss, or you can write stock deficit or stock that was damaged. And then how much are we losing? We are losing 47,550. And then guys, and that's how you do what? That's how you calculate any stock. Maybe in this case a stock was stolen, and then you can always apply this formula whereby you are going to say your opening plus your purchases subtract the returns, and then that and then you're going to have the total goods that are available for sales, and then on top of the available goods that you have for sales, how many units did you sell, and then from that you are expecting to have something that is the stock that is remaining in the business. And then stock that is remaining in the business compared to your what to the stock that was supposed to be in the business, that's where you are going to be able to define that you have a deficit or a surplus. And then guys, and let's continue with our question paper. And then the following question, it says it's 1.2, refer to information B2 only. So now we are going to take a look at information B2, and then 1.2.1 it says calculate the profit or loss on sale of the vehicle, 5 marks. Meaning now guys, we need to calculate the profit or the loss on what? On the sale of the vehicle, meaning we sold our vehicle. And then in this case, meaning we are going to take a look at transactions that are what are related to the sales of our fixed assets. And then that information they told us we'll get that information at what? Information B2. And then guys, let's go to our information B2, and then our answer sheet is as follows: calculate profit or loss on sale of the delivery vehicle. So guys, let's get to our information. And then we have our fixed asset And then it's land and buildings. We see vehicle opening 2021, closing 2022. We have land and building, vehicle, accumulative depreciation on vehicle, equipment, as also accumulated depreciation on equipment. And then it says vehicles are depreciated at 20% per annum on diminishing balance method. So guys, we need to note that vehicle depreciates on what? On the diminishing balance method. And then diminishing balance method, we know that it's cost minus accumulative depreciation, and then we are going to get a what? Carrying value, meaning this 20% then will multiply by our carrying value, will be multiplied by our carrying value. So this is the formula for diminishing balance method. And then point number 2, equipment is depreciated at 15% per annum on cost. So equipment is only what? Calculated at cost, meaning we're just going to take the cost of the equipment multiplied by the percentage, straightforward. And then the bookkeeper calculated total depreciation as 328,200 before taking the following into accounts. So now already they have provided us with total depreciation as this much, but before taking the following into account, meaning these ones, they need to be added. And then vehicle, it says an old delivery vehicle with a carrying value of 170. So guys, we spoke about our what? Our carrying value, and then we know carrying value is cost minus accumulated depreciation, and then equals to what? Our carrying value. So our carrying value for this vehicle is how much? 170,000 on the 1st March, meaning at the beginning of our financial period. Was sold. We are looking for this. We said that in this question we are looking for what? For transactions that are related to sales of what? Of our fixed asset. So now we sold a vehicle for how much? For 140,000 on December 2021. So now we need to calculate the profit or loss on sale of the delivery vehicle. So guys, now let's get started with our calculations. So guys, let's understand this thing in accounting. As a business, if ever we want to sell an asset, then we are going to sell that asset using what? Using carrying value. We are going to sell the asset using its carrying value, because of now this is the book value of the what? Of the vehicle, and we are giving that book value as how much? 170,000. Meaning whenever we want to sell this vehicle, we must sell this vehicle with what price? 170,000, because of this is our what? This is our carrying value. 170,000, 175,000 is 170,000. It's our carrying value. Then whenever we want to sell, we need to sell with this amount. But when? 1st of March. So from 1st of March until the 1st of December 2021, we have been using this vehicle. This vehicle has been used starting when? March, April, May, June, July, August, September, October, November, December. We have been using this vehicle before we can sell this vehicle. So now we are no longer, this vehicle is no longer worth 170,000 because of it has been what? Been used, meaning it has been what? Depreciating. This vehicle has been what? Has been depreciating, and then meaning now we need to use what? Our depreciation method. And then they told us that vehicles are depreciated at 20% on a diminishing balance method, whereby we said it's cost subtract what? accumulative depreciation, and then it equals to what? Carrying value. Already we have been provided with the what? The carrying value. Then straightforward, we can multiply by our 20 over 100. And then this vehicle has been in the business for how many months in this financial year before we sell this vehicle? Then we are going to start counting. It's going to be March, April, May, June, July, August, September, October, November. And then this vehicle has been in the business for 9 months. Has been in the business for 9 months. And then 1st of December, now the business was no longer, the vehicle was no longer in the business, meaning now we are going to calculate by what? By 9 over 12 months. And then the depreciation on that vehicle is how much? We're going to punch 170,000 multiply by 20 divided by 100 multiply by 9 divided by 12, and then we find out that this vehicle has depreciated with 25,500 from 1st March until the end of November. And then guys, in this vehicle, so that we are selling this vehicle, is no longer, this vehicle is no longer worth 170,000, but now it's going to be worth how much? We are going to say 170,000 minus the what? The depreciation amount, because of we've been using this vehicle. And then whenever we want to sell this vehicle, it must be sold at how much? It must be sold at 144,500, meaning during December, the 1st of December, whenever we decide to sell this vehicle, then it must be sold at this amount. And then it must be what? Sold at this amount. So now let's find out how much did they pay, or how much did we receive for this vehicle. And then it says 1st March 2021 was sold for 140,000 on the 1st December, meaning now we were supposed to get 144,500, but we got only 140, meaning we made a loss. And then how much did we accumulate as a loss? Then the amount that was supposed to be what? Sold for, subtract the amount that is sold for, and then we lost how much? Then we're going to say 144,500 minus 140,000, and then we lost 4,500. So 4,500 is our what? Is our loss. We lost this amount. So guys, and it's very important to take notes every time. Whenever you sell a vehicle, if ever you bought your vehicle maybe for example for 120,000, and then you start using your vehicle to do whatever you do, whenever you sell this that vehicle, you are not going to sell it using the same amount that you purchased the vehicle, but now you need to sell it using the what? The carrying value. So in this case, that's why we are using what? The carrying value. And then out of that carrying value that it was given to us at the beginning of the year, we did not immediately sell that vehicle when starting 1st March, but we sold that vehicle when 1st December, meaning we have been using that vehicle from March up to November. And then 1st December, that's when we decided to sell the vehicle, meaning it's no longer 170,000, but we need to identify the depreciation. And then after identifying the depreciation, that 170,000, which is the carrying value, subtract the depreciation, because of we have been using that vehicle, then equals to what? The carrying value that is worth the vehicle on that time. Whenever we want to sell the vehicle, meaning we need to sell it using this amount. And then in this case, we can be able to determine if ever we made a profit or a loss. And then from our current carrying value, and then subtract the money that we got, then we definitely made a loss there. But if ever our amount, our carrying value before the sale of the vehicle is less than the amount that we got, then we made a what? A profit. So since we made a loss, guys, we need to go to our income statement under what? Operating expenses, and write our what? Our loss. And then we are going to say what we have, and then we have what? Loss due to sale of an asset. And then we made a loss of how much? 4,500. 4,500. That is the loss that we made. And then guys, let's continue. So make sure that you take notes and you understand. And then since now we are done with our question, which is 2.2.1, then let's move on to the next question. 1.2.2, it says total depreciation for the year, and we also referring to information B2. So now we are doing what? Depreciation. And then our answer sheet, and it also says what? Depreciation. Calculate total depreciation for the year, and then depreciation on the vehicle sold. And guys, remember that here we have what? Calculated the what? The depreciation for the vehicle sold. So we might as well include that 25,500. We might as well include that 25,500 as it has been what? Calculated. And then now we are going to calculate depreciation on alarm system. So guys, let's go to our information B2. And then our information B2 is as follows. It says, let's remember that guys, in the bookkeeper calculated the total depreciation as 328,000 before taking the following into account, which the vehicle and equipment. As our answer sheet says the same thing, that depreciation for before adjustment is how much? 328,200. And then now we managed to calculate our what? Depreciation for vehicle that has been what? Sold. So now we need to calculate depreciation on alarm system, which is what? Equipment. And then equipment, we are as follows. An alarm system costing 48,000 was installed on 1st August 2021. So guys, in an alarm system costing 48,000 was installed, meaning we purchased this 48,000. It's what? It's a purchase. It's purchased. It's what? It's referred as a new, which is what? It's purchased, meaning we need to calculate depreciation for a new equipment, or depreciation on the purchased equipment. And then we are going to what? To follow our rule. Equipment is depreciated at 15% per annum on cost. This is our cost. And then we are going to say cost, which is 48,000 multiply by 15 over 100, and then multiply by the months. This alarm system will be used for how many months in the business? We started purchasing this alarm system when 1st August, meaning we are going to start using that alarm system when 1st August. Then we are going to start counting from 1st August. But if ever it was bought on the what you call maybe the 30 or the 31 of August, then we are going to start counting from what? The following month after August. But in this case, it was purchased 1st of August. Then you're going to say August, September, October, November, December, January, February. Meaning this equipment alarm will be used for 7 months over 12 months. And then it will depreciate with how much? And then we are going to say 48,000 multiplied by 15 divided by 100 multiplied by 7 divided by 12, and then it's going to depreciate with 4,000 200. And then we are going to add the depreciation before adjustment plus depreciation for sold and also depreciation on alarm system. And then it's what? It's 328,200 plus 25,500 plus 4,200. And then our depreciation for the year equals to 357,900. So guys, in this case, we need to be able and be familiar with our calculations regarding the depreciation. I have videos that I have posted for grade 10s that tells you more about depreciation. So if ever you don't understand depreciation, go to my YouTube gallery, and then you will find a video that talks a lot about depreciation. And most of the thing that is important is that you need to know your method. As the diminishing balance method, you need to take your cost, subtract your accumulative depreciation, and then you have your carrying value, and then your carrying value multiplied by the by the percentage. And then if ever depreciation is calculated on cost, please make sure that you use your cost price, and then it also known as as a straight line. Yes guys, and then since we have the depreciation, total depreciation for the year, and then depreciation is our expense, then it needs to be recorded under our income statement. And then we are going to have depreciation. And then depreciation, it's how much? 357,900. And then guys, we can continue. So guys, we are done with 1.1.2. let's just tick. So now we go to 1.1.3, and then complete the following for the year ended 28 February. Statement of comprehensive income statement 1.3.1, and then our answer sheet, we have our 1.3.1 statement of comprehensive income for the year ended 28 February. And then guys, in income statement structure, if ever you want to know a lot about income statement structure, please go to my other videos, and then you will find that I have an income statement structure, and then you can view some. So guys, let's continue with our income statement. So guys, this is our income statement, and then our income statement structure, make sure you are familiar with our income statement structure. And then guys, it says sales minus cost of sales. We are going to have gross profit, and then we have other incomes. Commission income has been given to us, and then we are going to include other incomes that are relevant. And then other gross profit plus other incomes, it will be equals to our gross operating income. And then we are going to add all our expenses, and then we are going to get operating expense. Gross operating income subtract your operating expense, and then it will be what equals to operating profit. And then your operating profit will be added with your interest income, and then we are going to have what? Profit before interest expense. And then your profit before interest expense subtract your interest expense, and then it will be equals to your net profit before tax. And then your net profit before tax minus your income tax, it will be equals to what? Your net profit after tax, which is the net profit for the year. So guys, let's get started with our income statement. And then guys, this is the extract. Most of the time that whenever we do income statement or any financial statement, we need to have an extract. And then guys, we are going to simply start from our sales, and then we can record everything else. So sales has been provided, and then sales has been provided in our answer book, cost of sales has been provided, and then directors fees have been provided, and then audit fees have been provided, and then salaries and wages, they are not provided. Then let's write them down, and then we are going to have salaries, and then it says including contributions, and then our opening amount will be 1,381,500. And the most important thing, guys, that you need to do is that you need to show workings, you need to show opening balances, so that you can get what? Part marks. So salaries and wages, they are how much? 1,381,500, and then we showed that amount. And then commission income has been provided, and then rent income, because of it's an income to us, then it must be recorded under what? Other incomes. And then we are going to write what? Rent income. And then the opening amount for rent income, it's how much? 183,600. And then security expense, do we have any security expense here? Then it's not provided. Then we have to show the security expense, and then we're going to write down security expense as how much? Security expense as 72,500, as 72,500. And then interest on fixed deposit, it's question mark. And then interest on loan, it's 142,250, and then it has been recorded, given, and also what? Recorded for us. And then depreciation, yes, we have depreciation there, and it's already, we have already what? Recorded it, depreciation. And then sundry expense has been what? Provided here, but there is no amount for sundry expense, which is also what? A question mark. And then dividends on ordinary share, and then dividends on ordinary share, which is interims, they are not included under our income statement. And then, guys, let's continue now. We can go to our transactions, and then information number B, it has been dealt with, then we tick it, and then we are done with information number B1 and also 2. And then now we go to information number 3, and then it says 33,700 received from a debtor whose account was previously written off as recoverable, was posted in error to the debtor's control account. This must be recorded. So, guys, there is an error in this adjustment stating that we have received the amount that it's worth how much? 33,700, meaning we have received this amount from a debtor whose account was previously written off as a recoverable, meaning this debtor, we wrote this debtor as a bad debt because of, we said this debtor is irrecoverable, and then now was posted in error to the debtor's control account. This must be corrected. So now, guys, we need to correct our debtor's control. So under our debtor's control, what happened is that we have debtor's control. Debtor's control, it's an asset increase under the debit side, decrease under your what? Your credit side. So what happened in this case is that we have previously written off this debt as a what? As a bad debt. For how much? For 300 and 700. For 33,700. Just to find out that we have received that 33,700. So now we need to correct this error. So if we want to correct this error, then we are going to to debit our 33,700, and then we are going to write it as what? As bad debts recovered, meaning now we have recovered this debt. So now at the end of the day, this debtor does not owe us any money. We have corrected the error, and we have corrected the error under which side? Under the debit side, which is what? The positive side, as what? Bad debts recovered, meaning it's an income in the what? In the business. And then under our income statement, we are going to write what? Bad debts recovered. We recovered, how much did we recover? We recovered 33,700 that we previously written off. So now we have fixed the mistake. The debtor did not run away with our money, but the debtor now settled his what? His amount that was due to us. Then it's bad debt recovered, 33,700. And then guys, let's continue with our information. So guys, let's just note it down that under our debtors control account, debtors control at the end of the year, we had 2,700 and 2 million. Let me just write it down there. Debtors, and then we had how much? 2,746,300, and then we have recovered the debtor. We have fixed the mistake because of it was subtracted under what? Under debtors control. We subtracted this amount under debtors control. So now whenever we fix the error, then we need to what? To add it, so that this amount cancels this amount, and then at the end of the day we have 0, meaning so that this amount can be cancelled, we need to what? To add it under our debit side. Then it's going to be what? Added in our debtors control, 33,700. 33,700. And then guys, now we can continue. And then it says the provision for bad debts must then be adjusted to 3% of the debtors control balance. So guys, now we need to what? To adjust our provision for bad debt to what? To 3% of our debtors control. So under our debtors control, we have this amount at the what? At the end of our financial year, 2 million, which is there recorded there. And then there was this error that needed to be rectified or corrected, and then we have corrected that error. And then at the end, our debtors amount is equals to what? We are going to say 2,746,300 plus 33,700, and then our total debtors, it's 2,780,000, and then it must be adjusted to 3%, 3/100, and then it must be adjusted as how much? And then now we are going to say multiply by 3 divided by 100, and then provision for bad debts for this, it must be adjusted to what? To 83,400. It must be adjusted to 83,400. And then from our extract, our provision for bad debts from our previous year, from the beginning of the year, it's how much? 85,840. but it must be adjusted there. Then guys, if ever our provision for bad debt from the extract or from the trial balance is more than the one that has been adjusted, just to know that it's an income. It's an income. It's an income. So it's an income. If your provision for bad debts from the extract is more than the one that must be adjusted to, then you made an income. But if ever your provision for bad debts from the extract or from the trial balance is less than the one that must be adjusted, then it's an expense. So please take notes, guys. So now guys, in this case, we made an income. Our provision for bad debt from the extract or from the trial balance is more than the one must be that adjusted, meaning there is going to be an income to our business. And then in our income statement, we are going to write that we are going to say that provision for bad debts adjusted, and then the opening balance there from our extract is given as 85,840, and then subtract the one that needs to be adjusted to, which is how much? 83,400, and then the difference there is how much? 85,840 subtract 83,400, and then the difference is 2,440. 2,440 is the money that it will be our income in the business. So it will be our income in the business. But if ever our provision for bad debts from the extract or from our trial balance is less than the one that to be adjusted to, then it's going to be an expense. It will be recorded under your what? Under your operating expenses. And then guys, let's continue with our adjustments. And then we are done with this adjustment. Now we go to adjustment number 4. It says the business, can I just do this before we continue, just to clean our question paper so that we can be able to show the workings. And then it says the business signed a contract with Always Save Securities for guarding the premises. An annual premium of 32,400 for the period ended 31 July 2022 was paid in full on August 2021. So guys, in this case, this is where we are going to apply our timeline. So guys, now it says that we have signed the contract with Always Save Security, and then we paid an annual premium, which is annual premium, we know it's 12 months period. Annual premium, it's 12 months. It's 12 months period, meaning that an annual of 32,400 for the period ended 31 July 2022 was paid in full when starting 1st August 2021 up to when 31 July 2022. So in our financial timeline, we are going to say that February is the end of our financial year 2022, and then it started when March 2021. March, April, May, June, July, August, September, October, November, December, January. 12 months period. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 months period. So you know that, guys, anything that has not yet been received or not yet been paid, it will be shown by what? The positive side, which will be what? The accrues will be what? Accrued income, and also what? Accrued expense. And then anything that has been what? Anything that has been received at the end of our financial period, then it will be shown by which sign? By the negative sign. And all those things, they will be what? Prepaid expense, and also what? Income received in advance. So now this contract was paid from when? From August. Then we have March, April, May, June, July, August. August, we paid how much? 32,400. For what? For an annual, for security, for annual. And then how many months? April, it's August, September, October, November, December, January, February, March, April, May, June, July. So now we know that the sign that we need to use is a negative sign. For what? For the security. So security alarm, then we need to what? To subtract. We need to show a negative sign because of now it's beyond our what? Our financial year, because of it was paid till the what? Till July. So it's beyond our financial year. And in accounting, we stick within the 12 months rule. Anything that is more than the 12 months, then it must be what? Subtracted. So this amount of money, 32,400, it's for 12 months period. Let's make sure. So it's 1st August, September, October, November, December, January, February, March, April, May, June, July. Then it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Then we know this 32,000 was paid for what? For 12 months, then divided by 12. So meaning each and every month we are paying how much? Then it's 32,400 divided by 12 months, meaning each and every month we are paying 2,700. Then how many 2,700 we are not interested with? Then we are going to start counting from March. It's going to be 1, 2, 3, 4, 5. Then we are going to say 2,700 multiply by 5 months. Then it needs to go out, multiply by 5 months. Then we are not interested with how much? 13,500. Then it's called what? Prepaid expense. It's called what? Prepaid expense. Then because of it was paid after the end of our financial year, this 13,500 will only reflect when? In the next financial statement, or in the next financial periods. And then under security, we are going to what? Subtract 13,500. And then the final answer for security will be 72,500 minus 13,500. And then at the end of our financial year, we only accumulated 57,000 for what? For security. And then guys, let's move on to another transaction, and then it's transaction number 5. And then it says all details in respect of February 2022 salary of an employee were incorrectly debited to the sundry expenses account. Full stop. The following information relates to his salaries. So guys, now here they are telling us that salaries for February of an employee were incorrectly debited to the sundry account. So guys, we have another transaction that needs to be what? To be corrected. They were incorrectly debited, meaning added to our sundry expense. So now we need to correct this information. We need to correct this information before we can go to salaries. So under our trial balance, which is our extract, we have what? We have sundry expenses. So sundry expenses is how much? Sundry expenses, it's question mark. Then we know that it's question mark, but it was what? Debited. So guys, now we know that under sundry expense it's a question mark. Then we can continue with our salaries. And then under salaries, as the information has been given to us, the following information relates to salaries: net salary, and then we have deductions such as SARS pay, pension fund. And then we know that salaries, opening amount for salaries, it's 1,381,500, and including what? Contribution, meaning if ever there are contributions, then we need to include them. And then the error happened with what? With the following information. So whenever we record salaries that were omitted, we need to record using what? Using the gross salary, not the net salary. Meaning that how are we going to get our gross salary? Gross salary, we can say that gross is equals to net salary plus what? Deductions. And then because of net salary, it's what? It's gross minus deductions, and then equals to your net. It's money after deduction. So in this case, we can take our what? Our net salary and say plus 11,525 plus our deduction, which is for SARS 3,235 plus pension fund of 990. And then that we know that these salaries, they need to include what? Contributions. And then the business contributes 2 rand for every 1 rand deducted for pension fund. So as a business, if ever as an employee we contribute 1 rand, the business will pay that 1 rand twice. So for pension fund, as an employee, the employee contributes how much? 990, pays 990, then the business must need to pay it twice. So following the information, we need the business contributes what? Twice the for every 1 rand deducted for pension fund. So if ever you are paying 1,000, then the business must pay that 1,000 twice. So in this case, now we are going to include, we are going to say plus 1,908. So that is our salaries. And then they say note, EFT payments have already been processed for all relevant amounts payable. And then guys, we are going to add our salaries, and then we are going to say 1,381,500 plus 11,525 plus 3,235 plus 990 plus 1,980. And then our final answer for salaries, we have 1,399,230. And then guys, now we are done with our salaries. Please take note that whenever you record salaries, please use gross salary, not the net. Most of the mistakes that we do with that, we show the net salary. Please guys, add everything and then find out if ever your contributions, your salaries, they include contributions. If not, then meaning contributions, they go separately. And then now we can go to information number 6. We can go to information number 6 and find out what is happening. And then a tenant has been leasing office space on the premise since March 2020. She has paid the rent until 30 April 2022. Note, the monthly amount was reduced by 1,350 with effect from 1 January 2022. So guys, now we are doing rent income as we have the word tenant. The tenant has been what? Leasing our office space since March 2020, and then she has paid the rent until 30 April 2022. And then it says, note that the monthly amount was reduced by 1,350 with effect from 1 January 2021. So guys, in this case, we need to have our timeline as always. So as we know that our financial year ends February 2022, then it has started when? March 2021, and then it's March, April, May, June, July, August, September, October, November, December, January. And then since we have our timeline, now let's record this information to our timeline. And then it says that rent was paid until 30 April 2022. So April 2022, then we have the end of our financial year, which is February, February is the end of our financial year, and then February, March, April 2022, April 2022. And we know anything that is going to be anything that is after or received after our financial year, then it must be shown by what? By the negative sign. Then it must be shown by a negative sign, meaning that we already know under rent income, then we are going to have what? The negative sign. And then we can continue now, and then let's record our information. So it's been paid up to April, and then note that monthly amount was reduced by 1,350 with effect from 1st January. And then 1st January there was a decrease. 1st January there was a decrease of how much? 1,350. And then guys, in how many months did we receive money for? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Meaning we got money for how many months? For 14 months. We got this money for 14 months. Meaning this amount in our rent income of 183,600, meaning it includes extra months, which is how many months? 1, 2 months. This is what? 2 months, because of we only stick within 12 months period. So guys, and now let's calculate the rent that needs to be what? The amount that needs to be subtracted from our rent income. And then now we are going to say amount from our extract, which is 183,600. It was received for how many months? For 14 months. But in these 14 months, there was a decrease of 1,350. There was a decrease of 1,350. That started when? With effect from 1 January 2022. So now, starting, we have been paying the normal amount, which is 100% from March up to December. But starting January, then the money that we were paying, it was no longer 100%, but it was what? 90%. And then started from January, February, March, and also April for 4 months. So now we need to determine each and every month before the decrease we were paying how much. Before the decrease we were paying how much, meaning the amount that we have subtracted starting from January up to April. Then we need to do what? We need to add it. Then we are going to add what? 1,350 for the first month, second month, which is February, third month, which is March, and then the last month, which is the last month, which is April. And then it's how many months? 1, 2, 3, 4. Then it's 4 months. That was in a decrease for 4 months. Then we add those decrease so that we can see that each and every month how much we were paying before the decrease. And then the amount, the whole amount, will be what? We'll say 183,600 plus 1,350 plus 1,350 plus again 1,350 plus the last 1,350. It's for 4 months. And then the money that an amount for all that 14 months that we have before decrease, it's how much? 189,000. And then this 189,000 will be divided by our 14 months, and then now we'll be able to what? To see how much we were paying each and every month before an increase. So before a decrease, we were paying before decrease. So before decrease we were paying 13,500, meaning from March up to December we were paying 13,500. And then immediately after, immediately starting January, now we are no longer paying 13,500 because of there was a what? There was a decrease of 1,350, meaning we are now paying how much? We are now paying 12,150. So starting from January up to the last month, which is April, we were now paying how much? 12,150. We were paying 12,150. So now, as we know that we only stick within our financial period, which is 12 months period, anything above must be what? must be subtracted. So we are going to subtract the amount that we got for March and also for April, meaning we're going to multiply this amount by 2, and then 12,150 multiplied by 2 months, then it's how much? 24,000. And then now we are going to subtract how much? 24,300. And then guys, and that is the rent for you guys. Please guys, and try to practice more transactions that are related to rent. This transaction was very interesting because of there was a decrease, and then you must also be able to what to calculate the increase using percentages and everything. So make sure that you understand your transaction. So in this case, as they told us that the tenant paid the rent up to 30 April. So it's very important to have your timeline. Your financial year ends February, started March, and then their contract, it's because of it's for annual, then it's 12 months period, meaning they started to pay it when starting from March, and then the tenant paid uh, up to April, meaning it's 14 months, and we only stick with 12 months period. So anything that is above our financial period, it will be shown by a negative sign. And then because of there was a decrease immediately starting from January, then we need to add those decreases in this amount, and then going to add for all those 4 months, and then the total amount that is 100% for that 14 months is 189,000, and then we can divide it by 4, and then each and every month we can see before decrease we were paying 13,500, and then there was a decrease of 1,350, so now we are paying 12,150 per month. So because of we have extra months after our at the end of our financial year, then we need to subtract them, and then 1,250 plus another 12,150 plus another 12,150, then it's going to be how much? 24,300. And then we are going to add our 183,600 with our 24,300. And then our total rent income is going to be 207 so we are going to say 183,600 minus 24,300, and then our final amount for rent is 159,300. And then guys, we are done with our information number 6. We go to information number 7, income tax. So guys, in transaction number 7 we have income tax for the year is calculated at 30% of the net profit. The net profit after tax is 356,300 after adjustment. So guys, in this case they gave us 357,300, and then they told us is what is the net profit after tax. This is very important. After tax, it's after tax, meaning after tax, and then the income tax comes before, which is 30%, meaning after tax. Then this amount is equals to what? It's equals to 70%, and then equals to 70%, and then our income tax, it's 30%, in which we don't have, and then also our net profit after tax, which is 100%, whereby 70% plus 30% equals to what? 100%, and then equals to what? Question mark. So we have net profit after tax, and then income tax, and also net profit before tax. And then now, so let's calculate our income tax. So we are looking for 30%. We use the normal method that we know. So what we have the net profit after tax, which is 300 multiply by what we don't have. What we don't have, what are we looking for? We are looking for 30%, which is income tax. We are looking for 30 multiplied by 30 divided by what we have. What we have is what? It's 70%. And then we are what? Divided by 70%. And then our income tax, it will be how much? 356,300 multiplied by 30%, 30 divided by 70. And then we find out that our income tax is how much? 152,700. 152,700. And then in this case, we can go to our income statement and record our what? Our income tax. And then we are going to have income tax, because of it's an expense, inside your bracket, and then as 152,700. And then our net profit after tax has been recorded to us, has been what? Recorded for us. And then we are good. If ever you still want to double check your net profit, you can also this is the thing that we can it has been what? Provided to us. And then guys, let's continue. And then in this case, we might also find our net profit before tax. Our net profit before tax by taking this and adding it with our income statement, income tax, so that we can get our net profit before tax. And then we can say 356,300 plus 152,700. And then we have, let me change the pen. And then we have 509,000. And then guys, we can just use an up method in this case. Can just continue and use an up method in this case. And then now we know that in order for us to have the net profit before tax, we need to say what? Net profit before interest expense minus interest expense, and then equals to net profit before tax. So now we can do what? An up strategy whereby all the negatives will be changed to positives. And then 509 plus 142,250, and then equals to how much? 651,250. And then now we are left with what? Interest income. So guys, and this is how we do our income tax. So you just need to what? To know what is given to you, and then just apply it and use calculations. And then guys, then let's move to our transaction number 8. So guys, transaction number 8 is as follows. It says loan certain bank. All transactions with respect of the loans were recorded. Meaning now all the transactions regarding the loans have been recorded. Interest of 142,250 on loan is capitalized, and they told us that they have been already recorded. And then when we go to our answer sheet, interest expense, it's already been recorded. And then interest of 142,250 on the loan is capitalized. And now the important word is that the loan is capitalized, meaning the payments of loan will include interest. And then a fixed monthly installment including interest was paid in full. And then guys, a monthly installment that include interest because of its capitalized was paid in full. We paid. That's good. And then the company portion of the repayments will increase by 10% over the next financial year, meaning all our repayments will need to increase by 10%, meaning we are no longer going to pay 100%, but we are now going to pay 110% because of there's an increase. Because of there's an increase. Guys, and as I have said that we are no longer going to pay 100%, but we are going to pay 110. But this information, as it has already been recorded in our income statement, then we are going to come back for this information because of now we are going to have repayments. So now we can just say note back for our balance sheet section, and then this information, it will go to our BS, which is balance sheet. So it's a note back. We are coming back. And then shares and dividends, and then shares and dividends are not part of our income statement, then they will also go to BS, and then we are going to come for that. And then net asset value, it will also be part of our BS, and then we'll come back. So guys, and now since we have gone through the transactions for income statement, we might as well close off our income statement. And then guys, and this is our structure. Make sure that you have your calculator, and then sales subtract cost of sales. And then let me just do this so that we close off everything. And then sales subtract cost of sales equals to gross profit. And then we have other incomes, and then such as commission income, it's how much? 4,560. We are adding everything, and then plus our rent income of 159,300, plus bad debts recovered of 333,700, and then plus our provision for bad debts of 2,440, and then our other incomes is given as 200,000. And then now our gross profit plus other incomes, it's going to be our gross operating income, and then we are going to say 3,690,000 plus 200,000 equals to 3 million equals to 3,890,000. And then our operating expense, they will be shown in brackets. Let's make sure that we show them in brackets. And then we are going to add all our operating incomes, but now unfortunately we still have a question mark for sundry expense. Then we need to take look at another method on how to calculate, because of they told us that the sundry expense included the amount for salaries, but they did not give us anything from our extract. And then now let's continue from the downside. We see that everything has been recorded until profit before interest expense, and then we know that profit before interest expense, in order for you to get it, you need to have operating profit plus your interest income, and then equals to your profit before interest expense. And then guys, in this way we can just do what is positive must be negative. And then we are going to say our profit before interest expense, which is 651,250 minus 575,000, and then we find that our interest income is 76,250. Then this is what we did. We said that 575,000. Okay, right. We said that 651,250 minus 575,000, and then we had this amount. And then our income statement at the bottom, it has been completed. And then we know that operating profit, in order to get operating profit, it's your gross operating income subtract your expenses equals to your operating profit. And then now we can do to say operating profit of 575,000 minus operating gross operating income of 3,890,000, and then we have a difference of 3,315,000, and then it was obtained by taking our operating profit of 575,000 minus our gross operating income of 3,890,000. And then in this case now our sundry expense will be our balancing in figure. It's going to be our balancing in figure, and then we have balance in figure. Then we are just balancing in figure. All these amounts will be subtracted from this amount, and then we are going to say 3,315,000 subtract 1,124,000 minus 83,000 minus 47,515 minus 4,500 minus 35,710 minus 357,900, and also minus 1,399,230, and also minus 59,000. And then the difference that we got for balancing in figure is 39855. So guys, this is our complete income statement. This is our complete income statement, and if ever you did not understand, please rewind and make sure that you understand. Please rewind and make sure that you understand. So guys, we have completed our income statement. So now we need to finish up again our question 1. So our 1.3 has been completed, which is 1.3.1, and then now we go for 1.3.2, which is equities and liability section of the statement of financial position, which is what balance sheet. And then note, some amounts are provided in the answer book. Okay, right? And then guys, now we are completing our balance sheet, which is equity and liability section. So under our structure, as it has been provided to us, we have ordinary shareholders equity, which is there is nothing there, and then we have ordinary share capital with this amount, and then we can complete our structure, and then we are going to have retained income. Then we know that ordinary share capital plus retained income equals to our ordinary shareholders equity. And then we are also going to have non-current liabilities. Under non-current liabilities, we have loan. It's only loan. And then from our extract there, our loan, okay, right, we'll come back there, and then we are going to have current liabilities. Under current liabilities, we are going to have trade and other payables. And then we are also going to have SARS, and also if ever there were payments of loan, we are going to have what? Short short-term portion of loan, or current portion of loan. And then as well as if ever our bank is not favorable, we can have bank overdraft. And then we'll have what again? Shareholders dividends. Yes guys, and make sure that you know your structure guys, and you practice your structure so that you will be able to complete the balance sheet. And then guys, now let's fill up our balance sheet and make sure that everything is in order. And then guys, let's finish up our equity and liability section by completing our information that has been what that we have noted down, such as this one. And then it says that loan, all transactions with respect of loan were recorded. Thank you for that. And then interest and then interest of 14250 on the loan is capitalized, and then a fixed monthly installment including interest was paid in full. That is what we are looking for. And then the capital portion of the repayments will increase by 10% over the next financial year. So guys, now in this case we need to complete our loan. And then loan during 2022, as everything has been recorded, we closed using how much? Our opening, our amount for 2022 for loan is how much? Is 1 million. Can I just use the red pen? So the amount for loan for 2022 is 1,159,000. And then during 2021 loan it was 1,280,750, and then 2022 there was a decrease, meaning there was a what? The payment of loan. So how much did we pay? It was 1,280,750 subtract 1,159,000, and then we find out that the repayment that was made, it was 121,750, meaning there was a repayment of 121,750 towards loan from 2021 up to 2022. This was the payment of loan. And then now we already know that there is a payment of how much for loan. There we go, the fixed installment including, and then we know that there was a monthly the payment of loan of 121,750, and they told us that the interest is what? It's capitalized, meaning 142,000 has been what? Has been capitalized. And then 142,000 goes to what? To income statement. And then 142,000 goes to income statement, while 121,000 will go to what? To BRS. And then if whenever we add these two amount, which is what? The interest on loan plus the repayment of loan, then in loan it's what? It's capitalized. So now we know that 121,750, it was the repayment of loan, meaning we paid how much? 121,750. It's a repayment of loan. And then 142, it was recorded under what? Income statement as what? Interest expense. And then we can move on from this case now. And then now guys, this information says that the capital portion of the repayment will increase by 10% over the next financial year. So now we are no longer going to pay 121,750 because of now it's going to increase by what? By 10%. And then now we can just do our small bracket there, close off, and then we can multiply by say 110, as there will be an increase of 10%, meaning it's no longer 100%, but it's going to be 110, and then it divided by 100. And then if ever we say 121,750 multiplied by 110 divided by 100, then we have 1,339. Then we are going to have what? 1,33925, meaning now we are going, our repayments of loan will be 133,925. 25. And then now guys, we can calculate our loan and close it off. So we are going to say 1,159,000 1,159,000 subtract 133,925, and then our final answer will be 1,025,075. And then our non-current liability is this amount, and then we are just going to record this amount. And then now we are done with the loan information. We can move toward to shares and dividends. And then it says on the 28th February 2022 there was 1,150,000 shares in issue, meaning we had 1,150,000 units of shares at the end. And then a final dividend was declared on the 28th February. So if ever we have final dividends, then we know it's balance sheet, which is what shareholders dividends, and then which is final. So which is final, it needs to be paid, and then the total dividends for the year amounted to 3,400. So they already gave us the dividends for the year is 3,4,500, and then meaning this total dividends, it's interim plus final. And then we can go to our trial balance or our extract to take a look if ever we have dividends on ordinary shares, which is interim. Yes, we have. For how much? 207,000. And then now we can just take this amount and then subtract 207,000, meaning we are taking our total, subtract our interims, so that we can be able to identify how much is our final dividends. And then our final dividends, it's how much? We're gonna say 345,000 subtract 207,000, and then we find out that our final dividends is 138,000. and then we go to our current liabilities. We have shareholders dividends, and then we need to pay how much? 138,000. And then our short-term portion of loan is the repayments of loan, and then these are the repayments of loan, which is this amount, and then we're going to write it down as 133,925. And then SARS, and then now we need to close off SARS. And then from our extract we have SARS. From our extract we have SARS income tax, provisional tax payments. Then we have a payment of 130,000. So this is the payment of 130,000, and then we are going to show it under SARS that there is a payment of 130,000. It's a provisional payment, and then based on our income statement, we need to pay how much for SARS? 152,000. And then we need to pay how much? 152,000. 152,700. And then what is the difference there? 152,700. We are looking for the difference. So out of the 152,700 that we are owing, we only made a provision of 130,000. Then now we also have a liability to pay. So we are going to say 130,000 subtract 152,700, meaning we still owe SARS how much? 22,700. And then guys, in this case now we are having trade and other payables. So we need to know our structure and understand our structure. So under trade and other payables, because of we are paying, it's a liability, then we need to pay our creditors. We owe our creditors. Then we're going to have what? Creditors control. And also what we are going to look at, we are going to look at our timeline. So anything that has not yet been received in the business, it's accrued income, then it's positive. And then anything that has not yet been paid, it's accrued expense. Then anything that as a business we did not pay within our financial year, then it's going to go to what? To trade and other payables, because of it needs to be what? To be paid at the end of the financial year. Then we are going to have what? Accrued expense. And then also as a business, anything that has been received in advance, meaning is the money that we got at the end of our financial year, it's called what? Income received in advance. So anything that we got at the end of our financial year, it needs to do what? It needs to go back to its owners. So it's what? It must be payable to its rightful people, and then it will come to us in the next financial year, or in the next starting financial year. So we're going to have what? Incomes received in advance. So this is what we are going to have. Income received in advance. This is what we are going to have. And then guys, now we can go to our extract and do the things nicely without any stressful situation. And then guys, under our extract we have creditors control. This is our creditors control amount, which is 428,000. And then we are going to write it down as how much? 428,000. And then accrued. Then now we are going to look for accrued expense. So all accrued expense must be shown by a positive sign. So under our income statement, the only positive sign or any additional sign that we see is under salaries. And remember guys, and this was not even forgotten. This was paid, but it was under salaries. These salaries were what? Were incorrectly recorded under what? Sundry expense, meaning everything was prepared, we were just rectifying the mistake. So this is not our accrued expense. Then we don't need to force, but we need to put a dash. And then now we have what? Incomes received in advance. And then income received in advance, it will be shown by which sign? By the negative sign. And then now we go to our income statement, and then under our income statement we only have what? Rent income, and it's what? It's income received in advance. For how much? 24,300. And then we are going to take that 24,300, 24,300, and then now we can do what? We can record. And then without wasting any time, we can put our calculation. 428,000 plus 24,200 plus 24,300. And then guys, you can add this plus this equals to how much? 428,000 plus 24,300 equals to equals to 452,300. And then guys, in this case now we are done with our current liabilities, and then we can add all our current liabilities, whereby we can say 452,300 plus 22,700 plus 133,925 plus 138,000 equals to 746,925. And then guys, now we are almost done, so we are left with retained income. So under retained income, from our extract we find out that they did not even give us the opening balance and our closing balance, so meaning we need to look for it. So in this case we need to go to our information and look for anything that is relevant to our shares. And then guys, we have this information: net asset value per share, which is NAV. After taking into account all adjustment, the net asset value, which is NAV, was correctly calculated as 675 cents per share. So guys, now because of they did not give us anything in our extract or any information that can help us in order for retained income, we don't have either opening balance nor the closing balance, then we need to use our NAV. So under NAV guys, we have the formula for NAV, which will be our ordinary share equity divided by units of shares multiplied by 100 divided by 1, and then it gave us in this case 675 cents, and then it gave us this. So the number of shares that we have, they already gave us the number of shares. These are the shares that we have at the end of February 2022 as 1 million. Then in this case we can, so guys, in this case, as now we have the formula, we know that anything that units of shares will always be 100, and then our ordinary shareholders equity is 675. It's calculated as 675 cents, and then our units of shares, it's what, it's 100. So now we can use what the method of what we have, it's what we have, it's 100, which is 1150. What we have is the units of shares, it's been provided to us. But what are we looking for? We are looking for ordinary shares holders equity. We are looking for what, ordinary shareholders equity, which is what, 675. So which is 675. We are looking for its amount, and then divided by what, by what we have, which is what, the units of shares, which is 100, and then divided by 100, and then it's going to give us how much? 7,762,500. And then this amount we immediately record it under our ordinary shareholders equity as 7 million as how much? Record it as 7,762,500. And then from this case we can take this amount minus our ordinary share capital, so that we have our retained income. We know that ordinary share capital plus retained income equals to ordinary shareholders equity. So we can say 7,762,500 minus 6,670,000, and then we have the difference of 1,092,500. And then guys, in this case now we can take our ordinary shareholders equity plus our non-current liabilities plus our current liabilities, and then we have our final amount. And then now we can say 7,762,500 plus our non-current liability of 1,025,075 plus our current liability of 746,925, and then our final amount is how much? Is 9,534,500. That's our what? Total equity and liability. And then guys, please, if ever you don't understand, please make sure that you rewind and you ask under the comment section, so that you can be helped. And make sure that you always study, guys, and make sure that you get good results. So practice makes perfect at the end of the day. So this question paper is the National Senior Certificate Accounting Paper 1 Grade 12 for November 2022. So make sure you go and check it out and start doing what is required from you. So guys, see you in the next video. Bang!